most traders skip backtesting because they assume their system works in any market until it doesn't. I wanted to know for certain, so I took my F50 indicator and ran it on heating oil futures over the last several weeks and tracked every single trade. The results, they surprised me. And in this video, I'm going to walk you through exactly what happened, trade by trade, so you can see for yourself whether a simple rule-based system can produce a real edge in the market. Here we have heating oil. So heating oil has been a really strong trend recently. The F50 indicator system would have got you in this trend. We have the weekly chart on the right. So this is the May contract for heating oil futures. You can see here that we've got green and purple candles. So a green candle is a bullish candle and a purple candle is a bearish candle. So if we get a signal here, so this is the previous week, this candle is green, so we would have a bullish bias for the next week. And I have on this chart marked it with this line right here. Okay, so this is this Sunday at 11 o'clock at night. So this is the start of the week. So we've got our green bias for the week, and then I'm going to back test this going all the way to the next few weeks. So this was the first valid signal. So what we're looking for a strong impulse leg up that breaks a high, and then a pull back to the 50%. And then what we do is we target the 100% fib extension. And our signal is a green candle. So green candles are strong bullish candles we use to get in. So let's just put this between the swing high and the swing low. And so our signal to enter is a strong green candle. So once we get that, we can get in the market and get in a trade. So this candle's green. So what we do is we put our long position here, we put the stop loss here, and then we target the measured move. So this is a 4.48 to 1 trade. You can see there we got in that trade and boom. So that was held over the weekend. We had that big gap up when the US bombed Iran. And so we probably would have got out here. So that would have been a 6.34 to 1 trade. So the next week is here. Essentially where we would back test from here is we're wanting to find the swing high and swing low. So this is from here to here. And what we're looking for is a 50% pullback of that move. And then if any other structure appears, then we can target that. We've got some potential structure there. Got a swing high and swing low. If we pull back, we get a green candle, we can enter. So let's enter that. And of course, we would be bullish because at the low here and then enter on there. This is 3.29. We can just move the stop up a little bit, get around 5, and then we can target the measured move there. And then we can fib from here to here. So this is a 50% area that we can target. Again, let's just check. So then we're looking for a green candle to enter. There we go, got our green candle. So we can just enter there, stop loss there, and then target up here. So this is 6.7 to 1 risk reward trade. Remember, we're still bullish because this candle here, this was bullish right here. So we can just buy. Didn't get stopped out there because our stop loss was protected, remember. So let's just see how that trade plays out. There we go. So you can see here, this was another gap over the weekend and we would have got out there 9.57 to 1. So again, we repeat the process. So this is a new week right there. And then this is what the weekly candle looks like. This is what you would have seen on the Sunday. So what we need to do is fib from this white cross here. This is the pullback area to the 50%. So if we pull back 50%, then we enter on the first green candle. That's an entry there. So we got stopped out. That was quite a good risk reward trade. That would have been a 14 to 1 risk reward. So we're still long and we're looking for a green candle. Once we get a green candle, then we can enter. There's a green candle. So just put the stop loss down there because it's quite a small candle and the risk reward is 9.9. So we could even widen it to 7. So we can enter on right on that candle, stopped out. That's two losses in a row. And then if we get another green candle, we can enter again because the risk reward on these trades is really good. So our win rate can be 20%, 30%, 40%, and we'll still make money if our risk reward is high. So if we enter there, target the high up here. So it's 10.66 to 1 trades. Okay. Entry, and you can see how the price just takes off when you get these green candles. And remember, this is a 3-hour chart. this can fit around work and family and other commitments. It really is a chart that really works for working people. Okay, and what we can do is we can actually find some additional trades to add on, okay, because the risk reward is going to be super good. So we can buy that one. What's the risk reward on that trade? 15-1. That's amazing, right? Stopped out, no biggie. Again, these are tiny stop losses based on the risk reward. We can enter on that candle. So that is 11-1. Okay, it's out on that one. Let's just check where we are in the week. So this might be a new week. This was Monday, it was Sunday there. So this was a new week. Let's just check. This is Sunday the 15th, Sunday the 15th, right there. So we're talking right there. So then we were still bullish for the week. Let's just go back here. So this is the start of the week. And then we know we were stopped out on that trade. What we can do is enter again on that green candle, target the measured move up here. So remember, we're still in this trade right here. This is a 5-1 trade. Could put it there, 5.58 stop loss. And then we can let this one play out. There we go. That one hit as take profit, which is nice. And then we'll just look for an additional entry. This winner, 5.58, took care of these two small losers, and we're still up 3R. And then this trade right here, we are currently up 5R on that trade. So we've moved that to break even. And so we're essentially risk free. Then we've got a second entry there, got a second entry here. And I believe, were we stopped out on that one? Might have been stopped out. Might have been probably stopped out on the next one. And we're targeting up here, remember. Let's just go in. Let's just go in, because normally what we want to put the stop loss just below that low, because these are really strong green candles. So it's less likely that they're going to get liquidity sweeps. Depending on how much of a buffer you give, may or may not have been hit. So we are still bullish here. So we're still taking bullish setups. What we would have done is we probably would have been stopped out on that one. That was the Trump comment where he said that they were talking to the Iranians, and then we got stopped out. And we could have entered for a deeper pullback of that move. Okay, so let's just back test that. Okay, so this is a 50% pullback of this larger swing, stopped out there, and our trade at break even, we're still in that trade. And then we've got a green candle. We get to enter on that trade right there because it's still a 50% pullback. And because the risk reward on this trade, we're going to target the high here because the risk reward is 8.28. Up here, this would be 17R trade. Okay, so what we need to do is just target the high because that's more realistic. And actually, more advanced traders may target the order block up here. But we're not going to do that. We're just going to target the high here. So we're still in a bullish week, and we're just buying. We're buying stopped out. Okay, so we've just taken 2 losses in a row there. But because we've still got this one running, and also we've captured a 5.58 winner, and we've captured other winners here, we're still very much in profit, and we'll add it all up at the end. We are still bullish, okay, because we've not closed below this leg here. These candles have not closed below, so we can enter on the first green candle. So first green candle right here, and again, we're going to target the same target there, which is 6.07 to 1. We're just going to let this play out, and we're going to add if the market pulls back. Did we pull back 50% there? So we pull back 50%. We're going to enter on a green candle there. And then we're going to target the same high up here for 5.44 to 1 risk reward. And you can see here that we get this one's at break even now. So we're going to move this one to break even, and we move this one to break even. So you stopped out for break even on that one. We're still in this trade here, and we're still in this trade here, remember. Okay, so then what we got here, this was when I think it was Trump, they were said that they were going to end the war and they're seeking a ceasefire. So what we want to do is be entering on a green candle, pull back. So the first green candle we can enter. Are we a new week yet? I think the week was there. So we got a week there. 29th of March. So this candle here, this was a purple candle. Technically, we would switch our bias to bearish. And what you can do with the F50 indicator is you can switch to bearish, and then you can see all the purple candles. So we can essentially sell any 50% pullbacks on this leg. But let's just add up all the trades that we have made using the F50 indicator system.
A few moments later.
So that is a total of 34R for this whole move over the last few weeks, which if you'd like to know more, please visit the5minutetrader.com. There's a sales page on the website. If you're interested, then please sign up. This is really easy to trade. It's really super simple system to learn, especially if you have a full-time job. Any comments, let me know. Happy trading.